Hey everyone, so you're watching a new episode of HomePlaceFlorida. This is a website dedicated for real estate. My name is Steve Feler and I'm a realtor here in Tampa Bay area, Florida with Future Home Realty. I have a very special guest with me today, a good friend of mine, Thomas Knight, and he's a mortgage specialist. Thomas, please tell us about yourself.
Hi everyone, my name is, as Steve said, my name is Thomas Knight. I am a mortgage banker with Mutual of Omaha Mortgage. I've been in the mortgage business long enough. I've done thousands of loans and helped thousands of families purchase their new home or refinance. And so it's great to be here today to talk to Steve and help everyone learn a little bit more about mortgages.
Right, so Thomas, we spoke about this a lot before this interview, and I wouldn't say this interview, this is more of the serious educational conversation for people to understand what it takes to buy a property, what does it take to buy a home, and what's important about, unless you have tons of cash and you're really to just pay in cash, that's one thing, then turn off your camera, turn off your computer right now, don't watch this anymore. But what I'm saying, majority of the people really need mortgage, really need financing, sort of financing for anything. So I guess Thomas will tell us, we receive a lot of, Thomas and I, both of us, we receive a lot of different questions from our clients, and one of the most common mistake, I guess, what we see that people don't understand the value of to be pre-approved for the mortgage.
Right.
So,
yeah, this is what Steve is talking about. Is right now it's so important that someone becomes pre-qualified for your mortgage before you start searching for a house. And this is, and we can talk later about what it means to be pre-qualified.
Right.
But right now, what Steve was talking about is the importance of being pre-qualified. Is right now in the real estate world, I'm sure you've heard about this from your friends and neighbors who are looking for houses, and you're starting to look. Real estate is fast moving. It always is, but right now in particular. So if you're thinking about buying a house, you'd have to be pre-qualified because homes are going on the market and they're selling like that. And I know you see that as a realtor.
Absolutely. As a realtor, honestly, I had quite a few clients in my career, and it happens. Unfortunately, happens when you tell people, please pre-qualify for a mortgage, and they say, oh yeah, that's fine, I'm fine. We already have. And maybe they have outdated pre-qualification letter or something, but when they hit real dream home, when we've spent a month or a few months for sometimes to find the perfect property, and this property finally ready to be to receive an offer, happens to be there's something changes their financial situation or something happened, and that's it, that.
Right, and I see this when, again, because the houses are moving so fast, is happened today. It happened today, this afternoon. Someone called and said, I need to be pre-qualified for my loan. I went, fantastic, let me do it. I took their application, their financing, I was able to approve their mortgage to send them a pre-qualification for the loan. And by the time they talked to me at 1 o'clock this afternoon until 3 o'clock in the afternoon, that home had already been sold. It already had an offer on it that had been accepted. Now, so that person lost his dream home on the river.
On the river,
on the river. It was a beautiful home on the river because he was not prepared. Now, here's the good thing. He's prepared now. So he's going to continue to look, and the next time he finds his next dream home, his letter is there. He can make the offer and be approved.
So what does it take to qualify for mortgage, and what does it take to start qualification for mortgage?
Okay. The first thing that happens when someone calls me is we have kind of a get to know you session. I talk to that person. I ask them some questions, and some general questions about their income, their hopes and their dreams, what they want out of a new home. Not what type of home, that's where Steve comes in. He finds them a home. But from a financing standpoint, what are your hopes and dreams? And we talk about their job. We talk about their income. How long have they been at this job? Do they own a home right now, or are they renting? We talk about if they have any money saved for a down payment and closing costs. And that's a whole nother segment that we can talk about, down payment and closing costs. We ask about what they owe. And then we talk about their credit score. And so combining all of those factors and how much they're comfortable in paying on a monthly basis and how much they're comfortable purchasing, then we determine how much they pre-qualify. So that when I say, okay, you know, Mr. and Mrs. Jones, you're pre-qualified for X amount.
Right.
Okay.
So Thomas, question, I think you just rolled into my next question, which is basically a credit score, right? And can you qualify for mortgage without credit score? A lot of people don't understand what is this and what does it take. But thing is, and I'll let Thomas speak about this in more details, but credit score, if you live in these days in a civilized world, let's put it as, you understand that credit score basically reflects it's your mark, your mirroring of your ability to pay back, right? So I knew some cases, I had clients that survived bankruptcy, right, and they were able to buy their homes as soon as the bankruptcy period were off, but they did a lot of smart things. They knew they were consulted by mortgage brokers or by real estate attorneys or realtors, basically how to build back their credit. So
yes, and I always love using real world examples. I had a client just this week. He was very proud, and he had some things he accomplished. He had used cash, and he paid for cash anytime he wanted something, whether it was a car or a stereo system or whatever, a TV. He paid cash, and so he never had established any credit. So as a result, there's no history of, as Steve said, can someone repay a debt? Now, he has the willingness to do this, and he has the desire to repay a debt, but a bank, Mutual of Omaha Mortgage, we don't know that. And so you have to have established credit. And I can, if someone doesn't have a credit score, I can help them do that. But the bottom line of what a credit score is how likely are you to repay this? Mutual of Omaha is going to loan you a sum of money for most likely the largest purchase that someone's ever made in their life. Okay, how likely are you to repay that loan? Yeah, that's why what a credit score is about.
And Thomas, question is out of practicality, and there's a lot of people asking me about this, and probably you had the same questions. If you qualified for, let's say you have a client who qualified for X amount of money, right, on the paper, based on the system rating and everything, it doesn't mean it's always necessary to go to a max.
Absolutely.
Because that's, people misunderstanding that you have to be able to save money for a rainy day, let's put it as.
Well, and this is right. And I hopefully I'm not like some people in this business. What I like to do is I'll talk, what are you comfortable paying? Because I don't want someone to be house poor. I want you to be able to comfortably afford the monthly cost for that home and still be able to go out to dinner, still be able to go on vacation. And so you have a beautiful vacation and you come home and you're not going, oh my gosh, I'm home. Now how am I going to pay for this house? So just because you qualify for X amount doesn't mean it's a smart thing. Maybe it's a smart thing to purchase this amount where you're comfortable with. So that's a great point.
Absolutely, yeah. So what does it take? What's the difference between pre-qualified and pre-approved?
That's a great. There is a difference. A pre-qualification is what I do when someone initially gives me a call, and we talk about their income, we talk about their assets, meaning money they have, and we talk about their liabilities, and then their job. That's what they tell me, and then I pull their credit, and based on those factors, they're pre-qualified. So based on what they tell me, now that's a pre-qualification. The next step is a pre-approval, and there is a difference. A pre-approval is when I have verified all of those things that I was told. They say they make X amount. Okay, I need to see proof of income. They say they have X amount in the bank. Okay, once I see some bank statements, and then once I verify all of those things, it's a pre-approval. A pre-approval letter is a stronger method of putting in an offer.
Right, and Thomas, thank you so much for explaining this. I hope our viewers understand this, and then please feel free to, all information will be provided under this video. If you have any questions, feel free to contact Thomas or me. We'll help you to get through and help you understand what is this. But another question which a lot of times, and I was guilty, honestly, in my early age, I was guilty of the same thing, do not understanding how much you need to save for down payment, how important is down payment, and what is the percentage of recommended by the industry, let's put it this.
There are, that's a great question because there's some misconceptions about that. There are different types of loans, and what we do is we structure different loans based on how much, based on their credit score, income, assets, and liabilities. Okay, the most common types of loans are a conventional, and we can talk about those down payments amount in more details, or an FHA loan, which is 3.5% down. A VA loan is, if you've been a veteran, you've served our country, thank you, and that's 0% down. Or a USDA loan is 0% down. That's for more rural development. But then I'm going to circle back around to the conventional loan and down payment amounts. Typical wisdom, not wisdom, what people hear, you have to have at least 20% to put down. Not true. Not true. But with 20% down, you do not have PMI mortgage insurance, and that's a whole nother segment we can talk about.
And I know PMI mortgage insurance basically now these days it stays for the rest of your loan unless you refinance.
Once you have more than 20% equity in the house, on a conventional mortgage, PMI mortgage insurance goes away.
Oh, okay. You see, I didn't know that little detail.
It's gone. Except on an FHA, it stays. It does stay on the life of the loan. Okay, but depending on the types of your credit score and your income, with a conventional loan, you can put down as little as 3%.
Right.
Or I see a lot of people now putting down 5%. If your credit score, and we can talk in more details about what your credit score has to be, and but it's not as high as, it's like a 680, and you can put down just 5%.
That's interesting.
Yeah.
Well, Thomas, I think I have a lot of other questions from my that I printed out basically from my buyers, and we spoke about this. So I think one of the last questions in this segment I want to ask you, if you can tell about what's the mortgage points.
In my buying down points?
Buying down points, right? Because I had people call me and ask, my mortgage broker just told me if I do this and this, and that'll, it's going to cost me that amount. So is it always good to pay down? Maybe it's a little bit tricky question too.
No, it's not always good. It's not always good. And again, a real life example. Earlier this afternoon, with the person I was speaking about earlier. And I'm going to use, this is not always typical, and I don't always like to talk about what the interest rate was, because it was that particular person's circumstances. But in this case, just for general purposes, I'll say it. This person had a 2.5% interest rate. Interest rates are historically low right now. That's fantastic. Okay, now
that's what keeps us moving.
It does. It does. Well, it's keeping our economy going too. But 2.5%, that's fantastic. Okay, but this person said, "Well, I've seen online I could get, much lower." I go, "Okay, you can, if you buy down the rate." This is what's called points, buying points. Buying points. So yeah, you can do that, and so it's he wanted, well, I want a 2.25% interest rate. Okay, to get a 2.25% interest rate, it's going to cost you $1,800.
Wow.
Okay, now, how much is that going to save you every month? It was going to save him about $16 a month. Okay, so what is the repayment time? How, by saving $16 a month, how long does it take to recoup the $2,800? So buying down points is not always a good thing, but that's what we do. We talk about it. I look on the interest rates and we discuss, hey, does this, Mr. and Ms. Smith, does this make good sense for you right now? How long do you plan on staying in the house? What are your goals? What are your hopes? What are your dreams? And then we form the right mortgage for you.
Great. Thank you so much, Thomas. So this is the end of this episode, and please subscribe to this channel and follow us on social media. Myself and Thomas, all the information will be provided here on the screen and information below. If you like this, please don't forget to give us likes, subscribe, follow us on Instagram and other social media, Facebook and whatever will be listed in there. Important is we can produce more shows and more conversations like this if we receive real questions from real people, and this is very important. We have a lot of questions that we received previously and we're kind of accumulating them and trying to talk about this, but please don't hesitate. Please just, it takes a second, write a comment or say something about what you're interested to hear about in the future episodes, and we'll be more than glad. Maybe we'll invite some other specialists.
Absolutely. And that's one of the things, like I said, I love real life experience, real life examples. So, like Steve said, just ask the questions and we'll do our best to answer them.
Right, so don't forget to see us on the social media, #HomePlaceFlorida, and Thomas, your information will be provided there. You can say if you want.
So mine is Thomas Knight, Mutual of Omaha Mortgage, and on Instagram, floridamorgageforyou, and we'll have all this where you can follow.
All right, thank you so much. See you next time.
Thanks now.